Hello, everybody. Welcome back to Crypto Talks. My name is Phil, and that's Rob.
Hello.
I did the right way this time. Finally, it's just been a year and a half. But yeah, we're back and we're doing a TA Monday as per usual. And we've got some interesting stuff kind of going on. Bitcoin has closed a weekly candle higher than the previous all-time high weekly candle close, which means proper all-time high confirmation. Because a wick here and there, not really chuffed about that, but a weekly close, that's big. So we're going to look into some Bitcoin stuff. Hopefully we'll get some cool questions from y'all, and we'll try to get through those. And we are going to talk about something that has to do with futures trading as well, which is going to be what Rob is going to kind of dig into properly this time. And that has to do with funding rates and how that can affect the market overall. And so, yes, let's get right into it. And first of all, by the way, hi Imre, I see you there. I don't know what that is. That a I don't know what that is. That's a weird emote. I've never seen that before. But either way, it's a nice one. Good job.
Looks like a little.
It looks like a little one of those. Hello. Oh, hope nobody clips that and gets me going like that. Oh, I shouldn't have said that. Dang it. All right, it's fine. It's cool. Do whatever you want, guys. Now, back at the chart that we always keep looking at. Last stream, we took away some of our trend lines that we had because they are now sort of redundant. We'll put them back if we start getting into some, downtrending stuff, which I don't really see happening just yet. But that's when we're going to put those back. So what's happening right now is this is the weekly close that I was talking about. A big one with a fairly substantial lower wick right here. And we closed it above this. Oh, I've actually accidentally moved this. I just noticed. There we go. So 60, I think it was 65.7 was the previous all-time high weekly close, and we've closed well above that now at 69, just under 69. I think it was like 68.948 or whatever.
Nice, either way.
Yeah. So, let's talk about where we think this is going to go now, because now we've crushed the all-time high. The all-time high was 69. The all-time high that I feel was a proper all-time high was 65.7, which was the weekly close, which I just talked about here. And we're well above that now. If we go into the daily here, we're trending up the same way as we did back over here when we were fighting 38 on the way up for a trend line that was right here. And we're kind of getting the same type of move, but a little bit more uppy, let's call it. And all of this, a little bit more uppy, yeah. And obviously all of this is very bullish. It looks really good. Everything is extremely overextended here, but like we said last stream, TA doesn't really, we can't really make much of a prediction here. And we're being honest with this. It's very hard when there is nothing above us. It's hard. But
it's really simple. You cannot have an exponential bull run without things spending weeks and months continuously overbought. That's what an exponential is. That's that's necessity in order to have one. So yeah, don't panic and go, oh my god, we've spent 2 weeks with the RSI and oversold. So what? Let it ride. Genuinely let it ride, because as we've discussed many times, the RSI can reset and price doesn't go down. So
yeah, precisely.
Don't panic.
And here's a perfect example. Like we talked about this before as well. We get these exponential moves up, big pumps up, and then we have like a sideways move or a slightly slow chugging upwards, or a little bit of a downtrend or something like that for a while. And you can see previously when Bitcoin had these pumps, and this is a pattern that I want you to recognize. Big pump, violent volatility, right? Big pump, volatility, and down. You see, these are very long-term type moves. I mean, just this move from here to here was 90 days. It's 3 months of just kind of sideways and down over here as well. But then now we're seeing these. We get a pump, and we get a couple of weeks like this, 2 months maybe, or whatever it was. I can't actually remember. I'm actually going to measure that because I want to. Just about a month, a little bit more than a month. And then we had this thing, same thing there. But now we're seeing these pumps a week stays up and barely in any type of slowdown at all. It's still up, and this is the difference. Now we're seeing, instead of up, slowly down for a long time, we see up and then up and up and up. So this is the pattern that we're currently in, and this is going to break, obviously, at some point. But we can't have this, and we're not probably going to see these resets of the RSI like this during this type of move. We might see, just chugging along up here for quite some time, right? And that would allow us to move a lot higher for a long time. It doesn't necessarily mean we were going to go to 150K or something during this, but
it doesn't mean we can't.
Doesn't mean we can't either, right? And we've talked about this. We have a psychological number that we want to mark on this. I was going to say map. It's not a map. It's the charts, but it's essentially a map. So I'm going to make this. Yeah, I'm going to make this into a large line, and I'm going to make it pink. So that's really ugly. That doesn't work at all. Let's make it super visible. Blue is good. So here we go. 100K is kind of the next target, and that is, like we said last stream, just a psychological number. There is going to be I think you worded it really well. You said a monumental resistance at 100K, right? And that is true. And the only reason for it is that it's a psychological number. There's nothing here in the past, because we've never been there, to suggest that there would be some kind of resistance there. It's not like when we hit this level here at 48K where we got stuck for a while, and it's not like the all-time high where we barely got stuck. We actually pushed through it pretty quickly. So
I would like to put across something to consider, though, which is in 2017, if you just go back to that, let's go and have a look at the monumental resistance that was 10K.
I'm gonna have to go to the BLX for that one. Right, here we go. 2017 right here. Yeah.
So let's see how long we spent at 10K.
So 10K is right about, let's see, right here. Not very long.
Yeah. Precisely 0 time. Basically, yeah, this huge, big psychological number running up from 1,000 to 10,000 in a year. Boom, straight through it like it was nothing.
Yep. Yeah, now, precisely.
This is, although this is a huge resistance, at the same time, if you are somebody preparing for a big bull run, where are you going to save your ammunition for? And it's like they'll want to take profit at 100K. If they've ridden it up, why will they want to take profit? They'll want to take profit so they can open up a new position. So that they can wait for the opportune moment when that 100K is weak, probably on a Sunday afternoon, and then boom, huge buy order, gobble up that resistance, and then trigger all the stop losses. So it may be that 100K doesn't actually offer any type of support resistance at all, but I wouldn't be surprised either. Either way, it's going to be a very big area of contention. I'd be incredibly surprised if we pass through it straight away without a solid rejection first. But ultimately, yeah, don't think that it's going to go to 100K and that's it, bull run over, because it is just a psychological level, and if there's more buyers than sellers, it simply doesn't matter.
Yeah, I mean, so what we're talking about here... I just want
to can I just apologize for my voice in advance, by the way.
It's okay. You're lagging quite severely right now, so we can barely hear that anyway. So it's fine.
I didn't know. I can't tell I'm lagging.
Yeah, no, you're lagging a little bit here and there, but it's. I think it's fine. Otherwise, people will complain in the chat, I'm sure. No, but it's fine.
Yeah.
So what we're trying to say here is that our job here is to give you scenarios. We said this I don't know how many times, but our job is not to give you sell here, buy here. It's to say, look, here's where we might encounter some resistance or support. So if we're just going to look at the 100K scenario, if we do fail at 100K and it starts coming down, I don't think it's going to hit 100K. If it's going to fail, it's going to go to like 98, maybe 99, and then topple, if that's the case. Because people are going to front run the 100K. No one's going to let it go to 100K and then sell it at like 100K exactly. Sure, there's a bunch of people that will, but the smart people with the big money, they won't, right? And so when you're looking at this, it looks like it's not a big move left. But if we go off the logarithmic chart, it suddenly becomes a much bigger type of move,
Yeah.
right? But
and again, this is that point of how quickly we get there. By the time we get to 100k, how much buying power is really going to be left versus the people who are going to say, yeah, I'm taking some off the table.
Yeah,
it takes a lot of buying pressure and right now, yeah, we know the ETFs are giving a lot of buying pressure, but that hasn't really met any significant sell pressure yet.
No, we had some trouble here, but that was so fast forgotten because we're gonna get into the funding rates later. But this dump right here on that day was basically a long squeeze that got eaten up within a couple of hours, and then we were back in the same trajectory, right? You see, there's no change of pace overall here, right? So the buying pressure is there for sure, right? So what I want to get into here is that, okay, let's say we do go into like the 100k area, right? Or let's say we just continue up here for a while. The only thing we can really talk about with certainty, or with where we can put lines and say here is where we're going to find support, is going to be back at where we are right now. Okay, simply put, this green line right here is the all-time high on the dot. That's the wick. That is not as powerful as the weekly close, in my opinion. This is where you wick hunt for me. That's basically where it's going to bounce if it comes down.
Agree.
Right? But if we kind of slow down here and start moving sideways, which is also a scenario that I look forward to, or that I can sort of, that I kind of believe in that as much as I believe in the pump up, because people do like it when things slow down a little bit after a while, right? You see these type of moves right here, this type of stuff right here. I mean, yeah, we could carry on just up slowly for a long time, forever, in fact. And during this type of chugging, the RSI will still come down. You can see that, right? We were still up in the same trajectory. Where's my line? You can see that same trajectory. We can carry on in the same way, and the RSI can still come down to midline, right? So keeping that in mind, if we do pump, their support is going to be on the 69k wick and the 65k, 66k weekly close. That's where we're going to find most support. And on top of that, you got 70k there, which is a nice even number. So you got 70, 69, 66 ish, and that's 3 layers of pretty good support. So going below that, once we get to 100k, I think is extremely unlikely, but I can also be wrong. Yeah, just letting you know, the next tier down after that would be the 48k mark, and going from 100k, let's say, to 48, 52% correction. Yeah, not unseen. Likely at this point with all this buy pressure.
I would say if it was going to happen, it would probably happen at 100k, and it would probably be a drop down to somewhere like 50k. I would imagine in the space of a week or two. I would think that if because this thing, what I was just saying, as we mentioned last week, it's the analogy of a battlefield, and right now you can see we are beyond the enemy lines. We're now just marching full speed ahead into enemy territory. We don't know where they're prepping their traps. Bears are prepping their traps. Their people are sitting there working out when to short the market, and we don't know when that's coming, but we know when it comes, it's going to be powerful and they're going to be well planned. So yeah, absolutely. If as me and you both have open leveraged long positions right now, we're we are susceptible, and we have to defend against the fact that at some point they're going to slam it down by 20% in one go.
Yep.
And if they succeed in that, and given the fact that yes, we hit 100k, say it drops to 80 to 100k in an hour, from 100k to 80, and then starts ranging sideways, how many people shit themselves and sell? Boom, we're at 75. more
Yeah.
stops hit, 70, more stops hit, and all the people who've been prepping all the way up
Yep.
suddenly all get wiped out in one go. And it would be, we've seen it before, it happened in the COVID crash. And you have to remember
Yep.
that the COVID crash COVID didn't affect crypto, had nothing to do with crypto on the whole.
Yep.
But certain external events meant that there were participants in the market who were forced to sell their crypto, no matter what the price. And that forced selling drove a liquidation that sent us basically 60% down in a day. And we'll sit there and go, oh yeah, but that was COVID, that was a black swan. No, it was leverage. It was leverage in a highly speculative, highly leveraged market.
Yep.
That's what this is. Do not think it can't happen again, and especially if it corresponds with a macro downturn. I think we're going to touch on that a lot more tomorrow, but we've been warning about macro conditions for a long time. As we've mentioned, it doesn't mean Bitcoin can't grow, because Bitcoin has periods where it just does its own thing. We're in one of these now, but we can snap back into correlation at the moment's notice when people suddenly have to start taking profits. And when people have to start taking profits en masse, this market and the way that we're moving forward right now, we don't have the support or liquidity to support it.
Yeah.
And we keep saying Bitcoin has 50% drops every year, pretty much.
Yeah.
It's been a long time since we had a 50% drop in Bitcoin, and I think 100K is a very nice place to stage
to make
from.
that happen. Oh yeah.
Yeah.
I mean,
now, yeah, I'd say the slower we get there, the less likely that is to happen. But if we're up at 100K in 2 or 3 weeks, I'm getting very nervous at that point.
yeah, I'm not longing there. I'll tell you that.
No.
No, and I'll be honest. I was very cautious with getting into a long here. What I was doing here was that I was waiting for some type of. I was waiting on the hourly to come back down with the RSI and everything to kind of try to snipe a quick, because my longs are not very long. I mean, they're not in time, they're not extended that far. I tend to want to do mine pretty quick. I wait for some type of, things are going to go. I get in, I do a fairly high leverage, and then I get out pretty quickly when I think the trend starts to kind of slow down. I don't wait for an extended pump up somewhere. I'd rather miss out on that and just secure my profits than, have these liquidations. And I'll let you get into the liquidation stuff here in a minute, but yeah, you're absolutely right. I mean, is it impossible for Bitcoin to go to 100K? No. Is it impossible for Bitcoin to dump back down to 70K? Let's call it 70K. That's a 30% drop. We've only ever had, since 2023, the biggest drop we had was 21.5%, right? From a peak to a bottom on the way up for corrections, right? And those have slowed down. We talked about this just very, very recently. They slow down a lot. It's not even a correction here. The RSI is correcting, but the price is still moving. Here's a small correction. That's 21% as well, by the way. So 21% here, 21% here, same thing. Bitcoin doesn't necessarily need a 30% or 50% dump, but if we get to 100K, there's going to be so much sell pressure there. And I think there's going to be so many late longers that longed from like where we are right now and start building that long up to 100K, and then they don't close it in time, and it's going to start that cascading thing that we talked about. 30% down is 70K from 100, obviously. If we go all the way to a really severe drop, 50% lands us at 48-ish, 50-ish. Is that impossible? No, definitely not. So please keep that in mind if you're planning on trying to trade this.
If that happened, so let's see, if that happened, would I sell my spot bag? Probably not.
No, same.
Would I close my long? Obviously, yes. Would I try and short it? Yes. But am I, at this point in the cycle, selling my spot Bitcoin bag? No. Because if I start seeing red wicks going down, I don't know where those wicks are going to stop, and I'm not selling the bottom on Bitcoin. That is one thing I absolutely refuse to do. I'd rather hold for a year through a drop than sell any sort of bottom. So no, what would I be doing? I'd be looking to buy. I'd be looking to take. I'll have stops all the way up. I'll have a chunk of cash sat there, and I'll be sat waiting for the buy trigger. I'll try not to be premature with that, because they say, I think when it drops, people will be surprised how fast it and how far it will drop. But everybody will always think that they've missed the boat. People right now are sitting here thinking, "Oh, I've done it again. I missed the boat on Bitcoin." And those same people are probably going to buy it reluctantly at 80k. And then they're going to watch it fall. And where's it going to fall? It's going to fall below where most of these people bought. It has, it's always going to, because those people, those are the exit liquidity for the smart people. So yeah, it's inevitable that wherever this does top out, it's going to get a really nasty rejection. And that's good, because it paves the way for the next leg up. We need to have that, because this is just so completely unsustainable, and we've just entered the big boy grown-up market. We're not behaving like a big boy right now. Now, that's not Bitcoin's fault. It's not our fault. It's the fact that we are a minnow and we've just been thrown into the ocean, and it turns out actually a lot of people really, really like this little minnow and want it to grow very, very big. So this isn't the sustainable path, and the reason why is the leverage that's in the system. So that's a good point to get onto where we're at the moment.
Yeah, we do want to talk about the funding rates. Do you have a screen to show, or should we just do this?
I do. No. Let me get it up. I thought.
And I'd like everybody to note that we both have our nerd glasses on today, just for you.
We do.
Because now we're going to talk about nerdy stuff.
Nerdy stuff, yeah. So, okay, so this is the Bitcoin futures open interest, and yeah, there's currently $35 billion worth of open interest, which I believe is an all-time high. I'm just going to not spoil this chart, because if you just switch it to the USD, then yeah, we can see open interest currently all-time high. That's in green, higher than it was back in February and April 2021. Is that yeah? So yeah, great. We've got an all-time high for open interest. People will turn around and going, be careful, be wary. All-time high for open interest. It's probably going to dump. Here's another perspective of looking at it, though. If you look at the open interest in Bitcoin terms, then the green was October 2022, which was, I imagine, maximum short interest, where everybody sold the bottom. And right now, we are nowhere near, in terms of the number of Bitcoin, close to an all-time high in terms of open interest. We've been flatlining. So yes, the open interest is going up, but so is the price of Bitcoin. This essentially is showing that actually the overall interest in the futures market, and I was surprised to see this, because I thought, oh, this is going to be sky high. But I looked at it and went, no, actually we're okay, because if we've got a whole new set of entrants to the market, and we know we have, and these entrants have got billions of dollars, and we know they have, then now the market has the liquidity to support a futures market of this size. So yes, funding rates are high, but we've been talking about funding rates all weekend. Me and Phil and Flippy, we've been just discussing this all weekend, because I used to have an indicator which I called, and I can actually get it up. I don't think it doesn't work anymore.
Oh, you can get it up?
So I don't really want to get it up. I can get it up. But I used to call it my crystal ball, because basically it just looked at, and all it did was looked at the funding rates and the futures market. It didn't even look at Bitcoin price. I'm going to have to get it up, because it is great. Well, it was great.
You got to find a better way to word that.
Oh no, it was
actually, don't stop wording it like that. That's perfect. I love the way you word that.
Amazing. So
Immer's just laughing his ass off in the chat. Glad you like our humor.
So basically, what this did was it told you when to buy and it told you when to sell. So you would get nice buy signals during times it was going to go up, like here and here and here, and then it would tell you to buy like here. And yeah, it also did you a really good solid and told you when to sell as well. So, and this didn't look at Bitcoin price. There was nothing to do with Bitcoin price in here, and it was done purely off funding rates. And funding rates, for those who don't know, are the mechanisms. We got into it a little bit last week. They're the mechanisms that the futures market use to try and pin the Bitcoin price, the futures price, to the actual spot Bitcoin price. And the way that it does that is by looking at the deviation of the futures price from the spot price. And if the price deviates too much, then the people holding those positions have to pay an increased percentage every 8 hours to the people holding a short position. And so all this indicator did was look at that position. And when Bitcoin was very young and immature, back in 2019, 2020, this worked beautifully because all the majority of market participants were dumb money. They were retail, and so they followed trends, and they bought tops and they sold bottoms. And the way that they leverage themselves in the futures market, and you'll hear it, that retail will just get wrecked time after time after time when they trade futures, because they are the lambs to the slaughter. And now what we're seeing is, if I go to the exact same indicator, if I go to the exact same indicator in 2020, it suddenly stopped working, because I had an entire year I didn't get a single sell signal, and all I got were buy signals that weren't, some of them gave some buy opportunities, but yes, mostly pretty bad. So I was a bit confused, and I wondered why this didn't work. And after mid-2022, I realized that the futures market isn't for retail anymore. The futures market is for institutions. And therefore, if you're an institutional trader who is able to use basically Binance, KuCoin, these markets that you can just do what you want. But if you're, I won't say institutional trader, I'll say professional trader, or you're a sophisticated trader. If you think that Bitcoin's going to go down 50, 60, 70% in a year, do you care that you're paying a very, very high negative funding rate in order to maintain that position? No, not really, because you know that you can leverage up and you can make a huge amount of profit using futures. So now we're on the way up. Everybody knows we're on the way up. Everybody knows there's no Bitcoin available on spot exchanges. Everybody knows there's a huge demand from ETFs. So futures traders should all be absolutely mega giga long. They have to be, because if you want to make money, well, Bitcoin's going to go up. Go on, long it. If you're shorting this, you're stupid. But the result of that is that funding rates get incredibly high, and we've been at the mercy of this all weekend, and we've been talking about it. Actually, what we've been discussing is we've been seeing in real time the funding rate move, while the price basically hasn't been doing anything. And I'd like to say I absolutely called it to the T on Sunday, where I was looking at it last night going, price is starting to move up, funding rates also moving up, about to wake up. They know that the US is going to buy tomorrow. So I'm looking at the futures market. I'm thinking now is a perfect time to grab liquidity. So we saw funding rates going up, and I said there's going to be a spike down, and then we're going to cannon into the Asian Open through nothing other than just watching this funding rate. And if you can keep an eye out on this and you see funding rate, if you're paying 0.2% every 8 hours to hold a position open, that's about 200% a year. So you have to keep on making profit, trading profit, and opening positions and re-leveraging. Otherwise, you're just going to give away all of your profit to funding rates. And that means that the market cannot stay giga long forever, because it opens up opportunities for long squeezers to come in with a huge amount of capital. And a lot of these will be longers themselves that go, yeah, we've ridden this gap far enough, guys. Let's take our $500,000 profit and then let's just slam the market down immediately. And when everybody's gigalonged to the max, all the late longers that open up a 10x position, the price drops 10%, boom, liquidated immediately. The people who are 5x leveraged, 20% drop, boom, liquidated immediately. And all of this cascading sell pressure is why genuinely don't be surprised if when this rejects, it does do something like a 30, 40, 50% wick down. And it will be a wick, it'll recover incredibly quickly. But this leverage is unsustainable and it will be wiped out. But right now, it's not excessive. Yep. Because the market can only dump if there's Bitcoin available to dump, and we've just broken the all-time high. Nobody's selling Bitcoin right now. So my position is going to remain long and strong. I intend to keep on making my big, long, strong position even bigger and even mightier. But I am going to be very wary of these liquidations. I'll be prepared to hand over all my gains in order to not get liquidated. I will if we're too highly leveraged, put a stop loss at break even. It doesn't matter if you throw away all your gains, just don't take a loss. Do not get, if you are leverage trading, do not blow your account.
Yeah, no,
because I agree. We're going to 100K, 200K, $1 million, 5 million, pick a number for Bitcoin. In May 2021, this is an absolute word of caution. I blew half a Bitcoin in one day, boom, on an account. Half a Bitcoin. So right now it's $35,000. And I did so because I saw the price go from 65K down to 42K in May. And I thought, this is a really, really good position now. This is a really nice pullback, 30% or so. Let's go. And I started building along, and it fell into a loss. So I doubled down again. I think at the end, at one point I was $90,000 long, thinking it's going to pull back. And it then rose up, and I would distinctly remember looking at it, and I was only a couple of $100 in profit. And I thought, I really, really need to close here. And this was like 42,600. And I didn't, and then it turned around and nosedived to $30,000. And account blown, gone. So that's and that's me. I would be lying if I said that's the by far the biggest account I've blown. It's not the only account I've blown. I know what I'm talking about because every single mistake there is to make, I've made it. I promise you. So,
and you're not going to do it again. That's for sure. That's the lesson.
That's the lesson, and it took me 2 cycles. This is my 3rd cycle now, and this is the first time that I actually am looking at it, and you have to bear in mind experience matters, because I thought I knew what I was doing 3 years ago, and I didn't. And it's only now that I'm looking at it going, no, I've seen this before, I've felt this before, I understand, and it becomes a sort of matrix style map in front of you where you do just have that gut feeling that and I know you're starting to get it as well, Phil, that you're you just see what's happening. And
I mean,
we're never going to be always right, but that's what risk management is for. If you can manage your risk, then you're already accounting for being wrong.
Yeah, no, this is absolutely true, and this is why we also tell people, if you're new to this stuff, learn how to invest first, meaning learn how to find where to accumulate for a long-term type strategy. And then you start looking into maybe trading a little bit more long-term, like you trade longer swings, like you buy a dip on the daily and then you wait until you think there's a peak and then you kind of try to sell that. I mean, start with that type of stuff. Don't just say, oh, Phil made 3,000% so far this year on his futures account, so I'm going to go there and start trading with 25x leverage. Don't do that. No. So I do want to show something though on my charts.
Can I just show something quick? Just coming back to funding rates.
Yeah.
So this is a quite little nifty map. This is on CoinGlass. So this shows. So there's the open interest. There's the funding rate. Yeah, funding rate heat map. Yeah. So you can see here that we've got this big orange bar now, and we have done for a period of time, and that's 100% plus APR. Now we've had that period, we did have a much smaller period back in December, where everything was a little bit excessive. And if we just take a little look back to what that period of time was, I've done it again.
Best
Back
tool
to
on
December,
TradingView.
best tool ever. Yeah, it was right here. So we had for all that we had this spike and a funding rate, and that was the first time that we had a nope, boom. You're not over leveraging yourself here. And we had a knockdown, funding reset, and then the price immediately moved up.
Yeah.
Funding rate has been high, so that's it. If you have got capital, if you're waiting to deploy, I'm not going to tell you to buy or not buy now. I've said straight up, I think this is going straight up towards 100k. I think Phil, you're in agreement. So, but that's from here. That's a less than 50% move for Bitcoin. So just be wary that you may get a better opportunity to buy in the future. And although if you don't have any Bitcoin, then maybe think about DCAing. But bloody hell, unfortunately, you are late to the party. You're not fully late. There's one thing I would just, maybe we'll get into shortly, because we do have a question, don't we? But I can mention that.
Yes, we do have a question.
So
let's see. I wanted to show you something real quick, just because we were talking about liquidations, and this is Bitcoin on the hourly charts, right? I'm sure just a couple of days ago when we hit the all-time high, everybody remembers somebody just market sold a whole big chunk of stuff, which started a cascading liquidation. And this is what that looks like on the hourly scale. So we had a big dump right on as soon as it hit. I remember I was watching it. We went to 69, boom, down instantly, right? And then we saw this stuff right here. And this was over in a matter of a couple of hours. If you see something like this, and I remember you, Rob, this day, that was a Tuesday, on the Monday before, which was right here when we were talking about this stuff, you said, if there's a liquidation that happens, my God, buy it. I remember those words. And that is what you would have been buying then. You see a big liquidation and it starts turning around. That's an objectively good place to take a chance. That's a good chance. And then afterwards, we saw a smaller liquidation right here. You can see it better on the 15-minute. There we go.
It was a pretty brutal one.
Yeah, we had a pump. So this is the previous one. Completely, but you see that wick? Yeah, that's when you buy that candle close, in my opinion, for me. But then we had this liquidation over here, 45 minutes of just straight down after a move up. And we had this little move here, which was a sort of a quick... I was watching this live before I went to bed. But it wasn't a liquidation cascading thing. It was one of those things this took care of what was left from here. Yeah, it was what was left from this as well. So that's a liquidity grab. And then now we have this.
That was that's what that grab was. We're about to pump it, so let's dump it first. Let's trigger what stops we can. So people like us. So Phil, last night we were there talking about it and going, what are we going to do? Is it going up? And I said, I'm not. I had my stop below the previous one on the 8th. Right. That was where I had my stop, and I'm going, if it goes below there, okay, yeah, maybe we're going down lower. But no, I'm holding, basically willing to hold into a loss, because I think I'm going to wake up and it's going to have pumped. Very annoyingly, I woke up at about 3 a.m. So basically about there. Yep. So I woke up, had seen that a decent chunk of my position, some that because I've been buying these wicks on Bitcoin, on Ethereum, on Solana the previous night. I saw that it had dropped into a loss. I'd bought some more, and then it had come back up into a profit. And so I thought, this might take a leg lower. I'll take some profit, put some orders down, lower down, trading in my sleep. And then I woke up in the morning and it had pumped away, and those orders were unfulfilled. Now, shit happens. What I did was an objectively clever thing to do in terms of risk management. It was a dumb thing to do if you know that it's going to pump in the morning. So
I'll say this though. What
Yeah.
I did, and this is kind of, you can see this on the minute. So here's the 69K all-time high, and when it did this move and then went up, and I saw it starting a red candle at 12 at night my time, and I was like, I'm gonna go to bed. So what I did was I was like, I'm gonna take a chance, and I'm gonna place a big order right down here around 66, right? Or was it 65.5? I think I put it just above this weekly close, because I thought if it's gonna dump and bounce somewhere, it's gonna be there if we get one of these things, right? So I took a chance and I did that, and obviously that didn't hit, but I woke up and I managed to actually get in right here. I think it was, right above 69, because it broke above it. So I got in a long there. So that's my long right now. And obviously, this is boring. When 80K, right? So I'm kind of just sitting in this one. I think I'm 45% in profit, something like that, which is nice. But again, had this hit, or if I'd layered into that, it would have been better. But also, if I'd layered into that, it could have gone much lower, and I could have been liquidated if I didn't have a stop loss. So,
and this is it. Is everybody likes to think shoulda, woulda, coulda. What if I had intentions of being super duper long from $28,000. And then I just didn't end up doing it because I was working away an awful lot of the time, and then I missed a lot of the pump. And by the time I came back to it, we were in the 40s. And then I was like, oh well, let's wait for it to cool down. And then the ETFs actually launched, and then it's like, oh shit, yeah, okay, now I do need to be long. But then I wasn't long enough, and so now I've been chasing the price all the way up, and it's only now that I've actually started to go, now I think I've got to grips of how this market's going to be traded.
Yeah.
And at this point, it's a purely psychological game. And I can trade when I'm sleeping because I'm dreaming about the Bitcoin chart. I already know what the price is when I wake up, so it's not a problem.
So okay, I have comment of the day from Imre. Never trade when you're sleeping,
unless you're Rob.
Unless you have stop losses and all that stuff prepared. That's how you trade when you're sleeping. But it's hard to. Don't wake up in the night and trade and then go to bed again without making sure that you got everything covered. So we do have questions. We have one quick question that I can answer from Mochi right here. And then I know Mochi has another one that she hasn't written yet, but we talked about it earlier in Discord. And I don't know, Mochi, if you want me to go through that question here. It's going to be a fairly long one, but I'm happy to do it. But if you want that answered here, just word it up here and press enter, and I'll get to it. But for this one, it's pretty simple for me. And this is, how will the halving affect the overall market and altcoins? So first of all, right now, the ETFs are on average buying up or eating up about 10,000 Bitcoins, give or take, a couple of hundreds here and there, or a couple of thousand here and there, per day, right? And currently, the Bitcoin supply has 900 new Bitcoins added to it every day-ish, right? And that means that if the halving happens and we remove 450 from that 900, and the ETFs are still eating up 10,000 Bitcoins per day, that 450 that's removed from that doesn't really make much of a difference, to be completely honest with you, right? If you think about it,
nope.
You're adding 1,000, let's say, just for simplicity's sake, you're adding 1,000 and 10,000 are bought. That's 9,000. You're adding 500 and 10,000 are being eaten up. You're still eating. 500 doesn't really make a difference in how the price moves, I wouldn't say. Psychologically, and as a big event in the crypto, it's arguably one of the biggest events every 4 years in the crypto space. Yes, it might have some effect, but in terms of Bitcoin's price move, I really don't see it making much of a difference, because the pressure of buying from the ETFs right now, and that's just from the American ETFs. I mean, imagine all the Asian ETFs, all the European ETFs, and the spot market. It's like,
I just got a announcement today, a pop-up today. The UK is now going to start. The London Stock Exchange will consider exchange traded notes for Bitcoin, and the London Stock Exchange is another behemoth.
Yeah, it's not
So
small,
you
is
know
it?
that is well, it wasn't long ago that the New York took over from London as the largest stock exchange. You know, London was the biggest stock exchange until we decided to voluntarily shoot ourselves in the foot globally. So
Yeah.
yeah,
Well, so that's kind of, I think, both of our takes on this, because
I have a bit
mathematically,
more take because there's the altcoin section.
yes, I would just say mathematically,
Yeah.
that's our take, because
Yes,
it's simple as that. It's just math on that one.
it is, and I have another mathematical take from
Yes.
basically previous histories on how's it going to affect the market. If you just slip my screen on, then
Oh yeah.
we can see.
There we go.
So here's just some pictures of the halvings are in green, and here are the previous cycle for altcoins. So this is the market cap excluding the top 10. So that takes away Bitcoin, ETH, XRP. Mostly the most important ones, it excludes USDT and USDC, which are very annoying that they're counted in like total market cap when they're not really crypto in the same sense. But if we look at the previous cycles here, so we see we're on our third altcoin cycle. First altcoin cycle, 34,000% roughly, bottom to top. Second one, just over 8,300%. And that was, if you look proportionally, there's about a quarter as much. And so if we just sort of say, okay, that's a reasonable extrapolation for this sort of market, and you can see in terms of where we are compared to the halving, we're right on time compared to the last one, then yeah, maybe another 4x would, that would be a 2,000% running total. That's something that's quite obvious and would fit quite well. So on that basis, we are, by my eyes, I'd say roughly halfway from through this bull market. And so some people are now looking and going, okay, do I need to drop certain coins? Do I need to buy certain coins? And this is going to lead on to this next question, which is this is the point in the cycle where you really need to look at your bags, look at what you have, look at your allocation, look at your risk management, and go, am I ready? The answer is no. None of us are ready. I'm nowhere near ready. Bitcoin's about to break all-time high, and my portfolio is worth less than it was in 2021. That's a failure. That's not ready. But we go with what we've got. So, is my plan ready for the next year? I'd like to think, yeah, I'm very, very prepped. Are you? Do you know what you're going to do? Do you know what you're going to be exposed to? Do you know how you're going to handle volatility? Do you know how you're going to manage a 30-50% drop in the coin that you're holding? You need to understand these things, because if you don't, you will regret 2025. That's that. Don't regret 2025 because you didn't have a plan. Keep the plan simple. Don't have a complicated plan. If your plan involves 50 altcoins and multiple indicators and timing everything on different time frames and this and that, no, you're too complicated. You'll mess it up. Again, trust me, I had over 50 altcoins at the top in 2021. How was I able to offload all of those coins at any given time? I couldn't. By the time I'd even realized, oh shit, I've got these 5 altcoins in this wallet. Oh crap, they're 80% down from the peak. They did a 10x from where I bought them, so great, I've doubled my money, but thrown away a fortune. Keep it simple. Keep yourself to a number of not small number of bets, but a smallish number of bets. Don't overexpose yourself and pick some stuff you have high conviction in. And with that, I think, Phil, you can
Oh yes, I love
answer
that.
the rest
That's
of this question.
I agree with everything here. So I asked Mochi to word up a question, because I know the question is actually longer, but I'm not going to dig into that too much. But here it is. So I'll give you just a tiny bit of background here. Mochi's rotating a coin into another coin here, right? And looking for an entry for Solana. And it's quite difficult to find entries because, as we know, we're in a pretty significant exponential move right now. And finding an in on something that's exponential is quite difficult, right? So there are some things we can look at, and I'm going to go through this for you, Mochi. It's not as complex as it seems. Psychologically and emotionally, it is quite difficult, and that's your chart and that's mine. So what we've done, and this is Solana, by the way. So what we've always done is we like to pull fib levels, first of all, and they tend to line up fairly well and give us some predictions for a higher move, for example, right? And they tend to work as resistances and supports as well. Usually not in the beginning. As you can see here, it's kind of like all over the place, because the market is trying to find some footing during a bear market bottom. What we did to find these type of bottoms and ranges was that we pulled a fib level from this bottom to this peak, and then we used that instead. Not that it's hard to do it in any other way, in my opinion. There's a bunch of other stuff too, but we're not going to get into that now, because now we're looking for an entry in an exponential move, right? So just looking at this, you can see how we've gone through these layers, and I'll zoom in just a tad here, and how we've broken through fib levels and resistance levels, and then sort of retested those by double bottoming here. And then we moved up and we got stuck in this golden pocket on the fib level, which is also this green line here where we have some resistance as well. So that's why we got stuck there. Now we've moved up here, we failed this fib level pretty significantly and fell down and bounced on the previous one. So that's when that's the second time we see the range kind of working. Here's the range, here's the range. We broke through the range, and now we're in a new range right here between the blue and the gray. So what I like to do is I like to find the range, which we now have. We see the ranges here. And I never want to buy the top of a range, right? I don't want to buy here because this can happen, right? The same way I don't want to buy here because that can happen. So what we do here is finding this bottom range, and we even have a massive support here from this peak. It's the weekly close here. That's why it looks weird with the wicks here. But $136.50 on Solana had some significant, and that line has been there since that peak happened. We put that line there, and as you can see today, we actually wicked down to that and bounced, right? Proof that lines work. So I know that you entered a position
all this
here, Mochi.
Technical analysis in a bull market is just nonsense, isn't it?
Yeah, it's kind of nonsense, but at least now we're looking at the ranges. So if you have, I'm gonna say this: if you take your bag and you split it into 4 pieces, so 25% each. Me personally, if you're super bullish on Solana, put 2 of those pieces in right now. Just whatever. If you're gonna hold until the peak market, if that's your plan, putting 50% of that bag in here, fine. Don't matter. You're at the bottom of a good range. The market is looking bullish. That's fine. But if you then have two 25% pieces left, I would be putting them on this type of support levels. So for example, one at 136, fine, that would have hit if you asked me 2 days ago. But having them sit on these type of lines is where you want them. And the best thing you can do is to try to find these ranges yourself, because I don't want to say put one here, put one here, put one here. My goal is to make sure that you can do that yourself. And so trying to locate ranges, trying to locate where we have supports such as this, try to get in there. And like I said, if you're super bullish on Solana and you just want to have a position, enter with half of it here, or even the whole thing if you want to, right? If you're planning on holding for peak market, and we think the peak market might be $1,000 for Solana, do you really care if you're buying Solana at 145 or 135? Right? Not really.
Yeah.
So
no,
that's what I can say for that.
So I can give a slightly different perspective as somebody who didn't accumulate a big Solana bag at the lows, to my error. And yeah, but now I'm looking at, this is now, I'm not looking at Solana and going, oh my God, it's peaked. It's going to go to, it's going to crash 50%. It may crash 50%, but I'm not particularly worried. It's clearly the winner so far of this bull market. And the thing to bear in mind that in a bull market, winners keep winning. At this point, the utility value of Solana is kind of irrelevant. Doesn't matter. It's cheap to transact with. You can stake it. You can earn some interest, whatever. It doesn't matter. Something that can move up 15% in a year, 7% interest per year, unless you are a long-term holder like Phil is, that to me has got zero interest to me, 7% interest a year. But if you are looking at it and going that I believe that this is something which is going to keep on gaining an adoption, keep on gaining an interest, and the fact that it has so far done so well means it's going to carry on doing so well, because it's already more people are talking about it now than they were a year ago, than a year before, or than the year before. That is growth. That's what you want to see. So I'm currently accumulating Solana. I'm doing so using a combination of futures, which I don't recommend anybody to do ever. Yep. I also have my own strategy, which basically every time it hits a buy and Solana moves up, I'm basically taking that bit of Solana and I'm putting it into my wallet. And that could be as simple as a DCA buy. Just every week, whatever you got. If you've got $100 a week to put in, just buy $100 of Solana per week. Do that. You may have a year before this peaks. If you are willing to hold through the drawdown, of course, I don't advise anybody to ever do this, especially looking at a chart like this. If you throw it all in and it drops 50%, as long as you're not going to be emotional about it and dump your bags at the bottom, then it may end up being a silly buy. If it pops up to 200 and comes back to 180, it won't look like a silly buy. And we can only sit and warn you about the risks of it dropping. We can't turn around and tell you the drop's going to come, and the drop may come from an awful lot higher, is what we've said consistently. Like, you cannot predict how high these things can go. So, but because I missed Solana, I am trying to catch up fairly aggressively. But what I am also doing is I'm kind of skipping Solana, and I'm looking towards Solana ecosystem altcoins, and I'm looking to see where can I find value in there. And so Jupiter, for example, I didn't use it, didn't get any of the airdrops. Right now, I see it as a purely speculative coin, exactly the same as Uniswap was in the last cycle, but Uniswap did incredibly well. I would expect Jupiter to do similarly well. Will it? There's Pith, Shadow. I know both me and Phil are both in those.
Nosana is good too. I like Nosana.
And again, I don't know if these are going to outpace. One thing that a lot of people found in 2021 was that they purchased Ethereum-based altcoins, thinking, okay, yeah, great, Ethereum's going to do a 10x, and these altcoins are going to do a 50x. And what actually happened was the altcoin did a 20x, but Ethereum did a 50x. And if you look at these altcoins on the altcoin to Ethereum chart, from launch, it's just a straight bleed down versus Ethereum. This project had absolutely no legs whatsoever versus Ethereum, and so you should have just held the ETH. And that will be the case for an awful lot of Solana projects. So don't think that, oh yeah, I'm just going to buy Solana altcoins and they're all going to do well. Don't. Most of them will bleed heavily. Yeah. But the ones that do well, the ones that still have small market caps, that is the plays that can make insane multiples. It's not too late to start getting into things like ICOs, which if you can get into cheap ICOs before the big glug of retail comes, and trust me, they're coming, and they're coming soon. So there is, I think, a limited window now where if you are somebody who likes to dabble with ICOs and you have cash set aside, maybe consider that. Do some hardcore research and find some gems. It takes work. There's no easy way out from that. You can watch YouTubers and hope that they're not getting paid too much from a referral fee or a sponsorship fee, that when they shill these bags, that it's just going to drop on them, because those people are going to shill their bags to you. They'll be in the ICO or the private sale, and then they will dump on you on launch. So be wary of anything that people are shilling. I mean, yeah, we weren't in any ICOs, so we're
Yeah.
not.
Yeah.
I'm not going to shill any coins I've got a vested interest in. But yeah, it's you can't put the easy work in if you want outside returns. Sorry, yeah, it's not easy work, it's hard work. You have to put the hard work in.
Mhm.
So that's my, I wouldn't say advice, but that's my play. My play is to make more Solana by trying to pick good Solana based altcoins, and
Yep.
ultimately all that Solana is going to go back into dollars anyway. So
Yeah.
what I am going to do is, even though I think Solana is going to do well, I'm not married to Solana. If I miss it, so be it. There are other coins that have done just as well. If you were in Injective this year, you didn't give a damn how well Solana did.
Yeah.
If you were in Render, if you didn't care. There's a lot of coins that we've talked about for quite a long time that, there are gems out there.
Yeah,
a lot
and
of them.
it's funny to say as well that some of these coins that have done really well are built on Solana, like Render, like Pith, like Jupiter, right? So there's that. I want to finish this off fairly quickly here. I have two quick things to say though. First one is this is the hourly chart on Solana, and this, all these funny little arrows, is one of our indicators that we've built. So if you're looking for, like, you want to allocate to Solana fairly quickly, but also instead of just going all in or doing a 25% type thing, if you could follow this type of tool, and this will be, I mean, I understand we haven't released this yet, but as soon as this comes out, this is something that teaches you something, which is you want to buy in an opportune moment. You want to buy when there is a dip, and this will show you buy, dip. All of these are dips. It's guaranteeing that you're not going to buy a top, for example. So that's good.
It doesn't mean it can't dip further.
Exactly, like it does here.
And that is it. This is now. What can we see here? Is we can see that for the past. Why have there been no buys? Wow, there's literally been no buys since. Oh, is it just turned off since the end of the year? There you go. Put on.
Oh, yours. Yeah, sure.
No, yours.
Okay.
Why is it? Because there's no buys towards the end of the.
Oh, there's no buy. No, there hasn't been any.
The right hand side.
It hasn't flashed it. I think if we
that's
turn
what I mean,
on
exactly. So
the soft entries will give you even more, and that will pop up here.
There you go. Yeah. So there, but there you go. So you see, like, during a big move, we had to turn the soft entries on in order to get some buys. Yeah, you need to be more aggressive when you're buying.
Yeah, go to 4
and
hours.
if you sometimes that means buying uncomfortably high.
Yeah.
And this is always a lovely piece of advice that I remember, which is the best times to buy are the ones that absolutely terrify you the most. Yep. Those are the times that you want to buy, the times when you think it's all over. If you think, oh, it's a dip, I'm going to go all in, it's probably not the low. Yeah. Probably not the best time. It might be, but what's more sensible is you go, here's a dip, I'll buy a little bit. Here's the next dip, I'll buy a little bit. You may end up with a higher entry price. You probably will end up with a higher entry price if we're in full bull. You'll have done it with a hell of a lot less risk to the downside.
Yep.
And that's it. You have to invest, speculate, trade, whatever the hell you want to do with your own risk management and your own mindset in mind. I've had a.
We did talk about this extensively in the past couple of streams, where we say you need to know who you are before you start doing this stuff.
Yeah.
You need to know what your risk tolerance is. You need to know what your time preference is. You need to know what your weaknesses are specifically. If your weaknesses is that you're a feeler, not a thinker, for example, that you go off of emotions rather than data and objectively good opportunities, then you need to know that that's your weakness, so you can work on that. But Rob, I do need to kind of finish this off. I just want to finish with super quick response here to this question from Mochi. Where's the best place to stake Solana? Will it lock up my crypto, and how secured is it? Okay, so super quick here. I can only speak for what I personally use. I'm not going to recommend things that I haven't used myself. And what I'm currently using is Exodus. It's the Exodus wallet. I hold my Solana there in various wallets, and then I will stake them. So it will lock up your crypto for Solana. It is an epoch. So an epoch is, or 2 to 4 epochs. So it's one epoch, and then it's 2 to 4 days, whatever it may be. So it locks it up there. So if you need to sell it, it takes 2 to 4 days to unlock it for you. Okay, that's a hell of a lot shorter time than most other staked cryptos. And how secure it is, I mean, it's Exodus. It's a very large and very well-known place.
I would say don't trust anybody's own opinion on how secure it is. Go find out yourself.
Yes, you need to look into that.
Don't trust anything if you don't trust it yourself. Okay, yeah, if somebody you trust completely says, yes, I use this, it's probably okay. But you haven't verified it. Don't trust, verify.
Yeah. And if you're scared about one of the best suggestions I have for this, which is going to take a little bit more work, is don't stake everything in one wallet. Split it up in 10 or 5 wallets. Stake one in Exodus, one over at Binance. Maybe it's going to give you a lower APY, but you can stake it in various places so that you can spread the risk. If one gets hacked, you don't lose everything. So think about that. But that's it. And now we kind of need to go because we've run over time quite significantly, and I have to go.
Yeah, it's been a while since we did over an hour. That's fine.
It was nice though. So everybody, you know the deal. Follow, like, all that stuff, and please, we're growing pretty quickly on TikTok actually, which is surprising me because I thought that the long discussion for me is the fun stuff. The short, quick clip thing is kind of boring because you don't get the whole picture. But hey, people like TikTok, I guess. And so we're growing pretty quickly there. Please, follow that. It's down here, crypto TikToks. And we're gonna making a little bit push for that because when we get to 1,000, we can go live on that too. So then we'll be able to do that a little bit more often than we do this specifically, and we can do it one-on-one. Maybe Rob does one, maybe I do one, and all that. So that's what we're gonna do.
We can actually do both at the same time.
And we can.
Yeah, we can stick our phones up here and just be like, "Hey, we're live."
Yeah, we're live, super live. Either way, thanks for watching, guys. Make sure to like, subscribe, all that jazz. Tell everybody you ever know that they need to watch this and that they need to buy a little bit of Bitcoin or something, and that we can help them figure out how to do that in a safe and fun environment or whatever. And join the Discord. All right. Cheers. Bye.
Bye.